Okay, let's take a look at this British pound dollar, right? Now, higher time frame 4-hourly, I can see that we are bearish, right? This is the zone I point out yesterday. That this is the zone I'm watching to sell. I'm waiting for price to come up here. Okay, so this is happened to be the 50% the price equilibrium of this entire swing. This swing, right? This 50%. So I'm patiently waiting for price to come up here and looking for sell here, right? So now to develop my buyers, okay, I go to my 4-hour time frame. Okay, I see that the price is bearish, right? I can see that clearly that overall trend is bearish. So now the thing is, if it is bearish, also we see there's a break of this structure low here. All right, we see this break of structure low over here, and price make a lower low. Okay, so the odds of the price moving up higher to price equilibrium or the swing midpoint and continue to go lower is much more higher compared than the price going back up, because the overall trend is down. All right, the overall trend is down. So I know that the odds of going down is higher. So now the thing is right now is, do I want to trade upwards or do I want to wait for price to come up to this level and then sell? Now you can do either one, right? Now if you feel that the risk reward from this area, this point over here, until your this midpoint, there is good enough risk reward, you can always look for a long, right? Then we can go down to the 1-hour time frame, and you see that whether there is enough risk reward or not, right? If not, you just patiently wait here for price come here and then look for your entry to sell. Now, if we look at this swing, we have a high here and the price drop. You see what the price is doing? It is ranging. It is creating stop hunting, taking out all the bullish buyer, right? And now it's creating liquidity once again. Okay, does it show us any sign that the price want to go higher to this level? I don't see that happen, right? Why? I don't see a bullish ERC example. I don't see any bullish break of structure high. So I have to assume that today, at least for today, I have to assume that my bias is likely to be continued downwards, right? So once I have my bias, you can see that these are the Asian sessions, all these pink box Asian sessions. So now I can see that the SM is moving the price up to tap onto this liquidity, the stop loss. And here we have stop loss as well, right? All the swing high, you have stop loss. All these are stop loss. So now you can see the price, SM is pushing up the price to grab what the stop loss. Why they want to do that? Because they want to move the price lower. Because in order for them to move the price lower, they need to sell. Remember, they need to sell. So where to find the buy order, the counterparty that they can sell to? They need to look for buy order. So where are all the willing buy order? All the willing buy order are located at the swing high, because when the traders start to sell, they place a stop loss above the swing high, right? So when they sell, their stop loss is actually a buy order. So these are all the willing buyer is going to buy from this sell. And that's the reason why we see the price pushing higher to do stop hunting. All right. Now, so the other thing I want to talk about is, this is very important, right? We talk about open, high, low, closed. Now, if today I have a bearish day, now look at this red, blue line. This is the opening price. Now, if today my bias is a bearish day, which means that the open is here, the price is going to make a high, and eventually for the day it's going to close below the opening price. It's going to do something like that, right? So we have open price with a high, with a low, with a close. So this is going to be a bearish candle, a red candle. Okay, the closing price is going to be below the opening price. So in other words, if I already have a bias that today is going to be bearish, you see that now this is my opening price. any price higher the opening price is a good sell for me. Does it make sense? Because we know that today is going to be a bearish day. We have a bearish buyer unless our bias is wrong. That's why I say that having the bias is very, very critical. Now, once you have your bias, then the rest is easy, right? I have a bearish day, so I also know that the opening price is here. Now, currently the price is trading above the opening price. This is the best area for me to take a short. Now, remember, I still have the price is taking out this liquidity, and we have this as well. So I might see the price go up higher. I don't know. I don't know how high you want to go, but I know that right now we are at the very good level to take a short, right? So I can actually start to look for now. Look at if we take a look at this, can you see that we have gaps here, right? We have a gap before like this, and it was filled by this candle. So now we have little gaps there. So maybe I just say maybe, right? We might see the price push up higher to grab this, to fill this gap before drop, right? So when the price finally arrives, so this become my AOI, and my AOI also can become this as well, because there is a trap order, right? So I have two AOI defined, and then I can now go down to a lower time frame and waiting for the price to come into my AOI. Then I go in with a confirmation entry. If I don't see confirmation entry, I don't get in, right? So this is a very short video, which I think that if you truly follow my video right from the start, you will understand how easy to look for setup. And all this setup, not guarantee every setup we can win, but all these setup are high probability setup, because I just explained to you, if I have a bearish day, right, and the price right now is trading above the opening price, this is the best level for me to take a short, because I expect the price by the end of the day tonight, right, it should be going down.